Welcome to the Fembol webinar. My name is Blessing and I am the Digital and Communications Marketing Officer at Fembol. Thank you everyone for being here. We have packed today's sections and definitely we have exceptional speakers lined up for you today. And today's webinar, as we all know, is titled Supply Chain Secrets. And that is basically, we are going to be discussing how businesses can cut costs, how they can eliminate delays and scale faster in 2026. So, and at Fembol, we know that a supply chain is no longer just a back-end function or just basically logistics. It's a direct driver for profitability and basically ensuring that all our customers are satisfied, and then there are also there's also measurable growth. So for many African businesses today, the real challenges is not just moving your goods from one location to another. It is doing it effectively, efficiently, and cost effectively, and without delays whatsoever. So over the next 1 hour, you will hear from 3 experienced professionals who will share practical insights and tell us their experience basically in the supply chain industry and how they are able to dot all their T's. So thank you once again for joining us, and let's get started. Put your hands together as I welcome our very own Mr. Ovie. Mr. Ovie has like 20 years experience in this industry. So trust me, you are learning from the very, very, very best. So please, once again, take your writing materials and jot down these things as they are going to be shared for free. Also, Mr. Ovie, okay, over to you, and thank you for joining us today.
Hello, everybody. I don't know where you are. Good morning, good afternoon, or good evening. We want to sincerely commend all of you who have taken out your time to join this webinar, whether you're joining from Lagos, different parts of Nigeria, Africa, and all around the world. We appreciate you. So we're going to be talking in this session on how such businesses can scale without losing efficiency. We'll be covering points such as scaling operations without losing efficiency, as I mentioned, end-to-end supply chain integration. Then we'll look at the role of strategic partnerships in African businesses. Of course, there will be no intra-African trade without cross-border business facilitation. So we'll be looking at cross-border logistics across Africa. And then, of course, we'll now be talking about the trends. What trends should business owners or logistics professionals look at for that plays an impact in the future of African businesses for 2026 and beyond. At the end of this session, key takeaway will be how a business, an African business, can turn the supply chain into a competitive advantage. So how do we scale operations without losing efficiency? You have documentation issues, you have interactions with the governmental agencies, specifically customs. You have issues with our road network that will affect how your goods move from point A to point B. You have the nature of our trucks. You have a skill gap in the expertise of the vendors or the suppliers or the partners that you'll be dealing with. So these are all the challenges that doing business in Africa comes with. To scale means you either want to increase the volume of your trade, you want to open more branches. I believe part of those joining us, not everybody is a supply chain master like Mr. Jeremiah. We probably have some small business owners among us. We have those who are in the supply chain industry or within that space. So this cuts across every business, whether you're in supply chain, in logistics, or you're just running your own small business. To scale, if you decide to open another branch, if you decide to increase the volume of trade that you're doing, despite all these challenges, all these issues that are strangling African businesses, how do you do that without losing efficiency? How do you do that without losing cost? How do you do that without having delays? Currently within Lagos specifically, there is so much congestion. Some people have not been able to receive their containers for the past 2 months, and that's no exaggeration. The terminals are maxed out, 92% in some cases, 95%. So what that means is the more you are bringing more volumes into these spaces, there's no space for you. Trucks cannot get in to go and get your container. You can't get your container to do your business, either you're in production or you're in distribution. It has an impact. So how do you scale without losing that efficiency? That's what we're going to be talking about. So traditionally, we see that, clearing requires other manual input of these errors and all of that. You need to rely on an agent. Sometimes we'll tell you stories from morning to night, and then you have to rely on the existing systems. So in growing your business, in expanding, in scaling, to focus on efficiency while doing that, we have to now start thinking of collaborations. How do we plan efficiently? How do we integrate existing systems? How do we collaborate with the right partners that can help us to achieve that? How do we use technology to help us in our scaling? So a lot of the things that we do manually can be automated. Can you look at certain processes that you run that you can automate? Can you look at creating a network of both your systems, your processes, your interactions with your suppliers and your vendors that is strong, that is integrated, interconnected? Can you rely on AI to help you with your planning, to plan smarter? Now, when we do this, you're able to scale continuously, keeping track in view of the realities that you face in doing business, and then you can have efficiency. Am I able to move to the next slide? Okay, thank you. So another point to scale smartly without losing the efficiency of your business is to have end-to-end supply chain integration. So what does that mean? Supply chain logistics, to break it down, simply just mean from the point you're placing your order with your original equipment manufacturer, OEMs, manufacturer, maybe you're a trader, for example, you place order in China, they're going to manufacture from China. From that point, from the manufacturer in China, from the factory, how does it get to the port in China, maybe Beijing or any other port in China? How do you determine what vessel should be used? How many containers are you expecting? Which shipping line should be used? So most people may not be aware of these steps involved. And even from then, how long will the vessel take, the ship take from China to arrive in maybe Onne Port, Lagos Port, Calabar Port, Warri Port? Then when it gets here, do you have all your documents ready that you're going to engage with the customs? What are the pathways? Is there a fast way? Is there a competent way for you to engage? Now you've done all of that. How do you get your goods out of the port? With the congestion there, you probably spend 2 months just to get your container out. How do you determine which truck you're going to use to make sure it doesn't break down 10 times along the road before it gets to you, in view of the fact that certain road conditions are unavoidable? So to do that, you need to have a kind of integrated system. Now, most businesses operate these steps in silos. So the key point there is to have a visibility to ensure you are engaging with the right partners who understand the flow within the supply chain, to have that network of connectivity between that manufacturer to the storage space, to the trucking, to the vessel handling, to the documentation, and then to your last mile delivery. Last mile delivery means they're loading to you, either to your own warehouse or where you are redistributing to your customers across. So this have to be in tune, all of them fully aware of the expectations. Take, for example, to have such an integrated system, you need data to drive that information. Already, you know, sending time from China may take 30 or 35 days, depending on the shipping line you use. In some cases, could even be more. Already, you know the turnaround time that you may have within the port. You know the key players. So how do you identify the one that aligns with your strategic goal to enable you to, as you're increasing your volume, as you're increasing how many more units or branches or shops that you need to have this synergy within the system, within the process flow, that your goods flow from the warehouse until it gets to your customers. So end-to-end supply chain integration is essential to achieve this type. It gives you better visibility. It helps you to make smarter decisions. And then, of course, you have a competitive advantage with the outcomes. Next slide. Role of strategic partnerships. So we've talked about that no man is an island, so to say, and most times businesses work in silos, right? And when I was explaining about end-to-end supply chain integration, I mentioned having the right partnership. You cannot afford to have the wrong person to partner with in running your supply chain. You cannot afford to have the wrong person to partner with in running your business. Now, a lot of these things that happen from the warehouse until it gets to your customer, you may not have control over. You probably don't have China. So who's going to be the agent in China that helps you with the FOB to ensure that from the factory, your items, your goods get aboard the vessel? Who's going to be the right partner that's going to make sure that you are choosing the right vessel that's not costing you too much? There are various shipping lines out there. How do you determine the one that is cost efficient, is cheap or relatively cheap or moderately cheap, but at the same time is fast enough? You wouldn't want to go and put on a vessel that has to call on 20 different countries, and instead of sailing time of 35 days, it's taking you 65 days. That would affect your bottom line, that would affect your production rate, it will affect your business as a whole. So you have to identify partners that align with your own strategic vision and mission. The statement there says, stronger together, delivering seamless, efficient, and resilient supply chain. So those partners will help you to resolve or solve some of the issues that are peculiar within the supply chain environment. Now, I work at Fembol as the general manager, and some of the things we've been able to do is to make sure that across the whole world, we have key strategic partners that have full understanding that their alignment, their business model, and their value proposition that our customers expect from us. So we align ourselves with these people. We review their business model, their processes to ensure that they're also in line with our own vision and our own key deliverables. So that is very, very key. You don't just jump into a space, pick the next guy available, the next truck you see on the road and say, oh, God, please help me to carry this thing from Lagos to Abuja. So a journey that should have taken 1.5 days, you end up finding yourself looking for the driver 1 week later, and your goods are yet to arrive. So within the whole process, within the supply chain, from the manufacturing to choosing the right vessel, choosing the right warehouse, even something as important as choosing the right port. So imagine you have an item to deliver to Uyo, but because you did not check and your partner doesn't bother, he booked a vessel that comes to Lagos, versus the partner who booked vessels that come to that Port Harcourt. Of course, you would agree with me that the one that you're moving from Lagos, you pay more in transportation cost than when you're moving from Port Harcourt to you, which is very near. Plus, the risk on the road that the truck from Lagos will take to get to you will be less than the one that is moving from Port Harcourt to you. So these key things, understanding of these key things, understanding the partners that align with your commitment, align with your business model, are the ones that you need to align with. So you have to identify them, ensure that their model aligns with what you want, ensure that they have full understanding with trackable data, history, that they have been proficient in their role within that space. So sometimes when we talk to either investors or we talk to our client, there is data. Data never lies, facts never lies. So in scaling, in opening that big shop, you need data and also from your partners to define the right partners. Professional of the business. Next slide. I hope I'm still audible to everybody.
Yes, we can hear you, sir.
All right, next slide, please. Cross-border logistics opportunities in Africa. So we're focusing on businesses in Africa. We've talked about having end-to-end supply chain integration. We've talked about having the right partnership. And another less looked at area is the opportunity that exists within cross-border logistics within Africa. Africa is a continent of about 1.3 billion people all around Africa. So Nigeria, as part of that, has over 200 million, which means the potential for growth, the potential for you to upscale your business is there. But how do you do that without losing efficiency? How do you do that without unnecessary delays? How do you do that without additional cost? Is what we've been talking about. Some of those cross-border logistics opportunities. You have corridors between Nigeria and Chad, Nigeria to Ghana, and then from the east, from the south, from the east, west, south, and north as well. So instead of putting, let's say, for example, you have a container, you want to have, you have either your suppliers or your vendors or your customers in Ghana. How do you get your product across to them? Is it possible to look at engaging a cross-border option to make sure we have that connectivity from Nigeria to Ghana, for example? And this is something we at Fembol have mastered because we have clients who want their finished products to get to people in Ghana, to get to people in Chad, to get to people in Lome, in Cameroon, all around Africa. And we have managed to be able to bridge that to ensure that there's that seamless, efficient cross-border process that ensures that these goods are delivered through landlocked environment. So if I have to take something to Ghana now, and I feel my only option is to go via sea, that means I have to arrange a vessel. I'm losing time while thinking of the vessel. The vessel will tell me the time it's going to be here, which may be 2 weeks from when I'm ready to send to the customer. So going through that route, I may lose 1 month or more just to get something to Ghana. Whereas if I utilize the opportunity that exists by just loading that on a truck, driving straight through the border, through Sema border, Lome, it gets to Ghana literally within a week, max 2 weeks. So this is something that should be encouraged. Of course, that cannot just happen automatically. It involves an understanding of the border interactions from country to another country. It involves already establishing those strong partnerships that we've talked about already. You don't want to give your truck or your item to somebody that has never applied that route. You may end up actually spending more and losing more time. So there's a connection between everything we've been talking about, entire supply chain integration, right partnership, all of this fuse into one, and looking at all the options available, not just thinking of just one solution, to ensure that when you're scaling, when you're adding more volume, opening branches, you are doing it smoothly, you are doing it efficiently, less cost to you, and the quality still remains the same. Next slide, please. For Africa as a continent, while thinking about growing the business, while thinking about scaling, certain factors have to be considered. We must understand the trend and be aligned with them. What is the trend that is common now? Now, AI has been a buzz. Some people think it's just a buzz. Some people think, maybe it's something. But the truth is AI has come to stay. How do you review your business processes? How do you revise your business as a whole to take advantage of this AI? Fembol, for example, we have embraced that, and we have developed an AI solution that enables you to have full visibility of, say, shipment, for example, from inception to the end, cutting across different aspects of the whole supply chain value chain, from procurement to manufacturing. There's an integration of all of this existing in place. So AI is a trend within 2026 and beyond that we must look at. Then, of course, we need to also understand connectivity and network, automation of processes, efficient, all of this system happening because of the green. So that are common, and these are the trends that are reigning. So in determining to scale, have you checked if the model you're using is sustainable? Is it friendly to the environment? How much of automation within your processes can you utilize? How much of digitization can you utilize? And how much of collaboration, networking can you utilize? So when we consider these aspects, when we consider safety, security, and all of that, it helps us to be very cognizant of the trends that are affecting businesses within the African space, and helps us to realign our purposes or realign our business visions to utilize these tools, to utilize these trends, or to make sure we have them included within our processes so that we remain relevant beyond 2026, we remain competitive. Because at the end of the day, for a business, whether a logistics supply chain company or a business owner, a manufacturer, you want to have a competitive advantage that enables you to remain in market, that enables you to become more efficient in smart ways to your customers, and of course, that is sustainable. Next slide. Thank you all for joining this webinar. It's been a pleasure on behalf of all the participants to engage with you.
Please go to the Q&A section and input your questions there. Trust me, we are going to take all of the questions. I think some people are already dropping messages. Please include where you are joining us from, your name, and then your questions, and we'll take it up from there before the end of this webinar. So with no further ado, let's make welcome our next speaker, who is Jeremiah Adeoye. He is the COO of Questum Logistics, and he is a certified expert in logistics, transport, and operations management. So Jeremiah is going to be taking us through the causes of delivery delays and operational bottlenecks, and most importantly, how to fix them. So Jeremiah, we are really, really glad to have you with us, and please, over to you.
Nice to have you today. Permit me, I would like to share my screen.
Okay, you can share your screen now.
Yeah, my name is Jeremiah Adeoye. I am the Chief Operating Officer at Questum Logistics Limited, Nigeria. And I'll be glad to discuss with you this theme, eliminating operational delays and building supply chain resilience. I would like to come with this. If, for instance, we are talking about operational delay, are we now talking about, and what does it have to do with supply chain? Because before we can get a proper solution to these delays, what do we know about supply chain? So I would like to quickly run through the 4 pillars of supply chain management. I wouldn't know how many in the audience, and I know you'll be conversant with some basics in supply chain management. But let me run these 4 pillars. And the 4 pillars of supply chain management often categorized as PSMD. That is plan, source, make, and deliver. Why are they fundamental? They are because they are used to map and execute a product's life cycle from raw materials to final consumer delivery. Having said that, you will have come across some diagrams, some information, some explanations about supply chain management. You think to wonder, how does it come about? Take, for instance, you have seen something like this. That's supply chain management, one of the diagrams you might have seen before. In this diagram, you will see upstream, downstream, value, distribution, logistics, information, inventory, and cash flow. Are you not going to be worked up on all this? What this is going to help you today is to know that all these can actually fit on 4 pillars of supply chain management. And let me quickly run what it means. The 4 pillars of supply chain management. When we are talking about plan, which is the first one, is the foundational pillar. You know one thing, before you delve into anything at all, you need to plan. So this foundational pillar aligns your business objectives with market demand. Not just like, I want to do something. You want to see the reason why you are doing it. And it involves forecasting customer needs, managing inventory policies, and planning production capacity to ensure resources are utilized efficiently while minimizing costs and risks. So you think about how you want to go about it, because this is supply chain and you need to prepare well. That is planning. The second pillar will be structures. This phase involves identifying, evaluating, and managing the suppliers who provide the raw materials or services needed for your products. Take, for instance, you know that in this my locality, this particular business is going to move well. This product will move well. You've planned how you want to go about it, but you need raw materials. What you're going to use to make sure that that comes to reality, that is source. Where are you going to get the raw materials from? And your sourcing must be strategic. It goes beyond basic purchasing. It focuses on building long-term vendor partnerships, ensuring quality standard, and negotiating cost-effective contracts. That is number 2. Number 3 is, first, you have planned. Second, you have seen how you can move a little bit to get the raw materials. Then how do you go about the project you're having? That is make. Make is also known as manufacturing or production. This is where raw materials are transformed into finished goods. You agree with me? No matter how good your ideas are, no matter how much planning you've been going through, what you make out of it defines all the processes. You agree? So operation professionals focus on lean practices, the quality control, scheduling, and reducing waste to ensure products are built quickly and consistently without compromising standards. But the fact that you've gotten your raw materials, the fact that you've planned very well, you still need to pay attention to how the product comes out. That is make. And the last one, now you have it. You need to deliver. This pillar, sometimes referred to as logistics or distribution, ensures the final product reaches the customer safely and on time. You know one thing, you could reckon this with Fembol Logistics, because the company knows that they do not only sell the quality, they sell speed and time. So deliver, it encompasses critical functions like warehousing, transportation management, order fulfillment, and managing returns. You see something here. You will see something in brackets, reverse logistics. Actually, I don't know the background of many in the audience, but many of you that want to delve more in supply chain, go and read up on reverse logistics, please. I can tell you authoritatively that it is not a valid course under supply chain management, and you'll cash out from it. Don't let me delve more into that. So we have seen the 4 pillars we talk about now. You need to plan first. You need to source your raw materials. And thirdly, you need to make, that's your product, and you need to deliver. Those are the 4 pillars of supply chain management. The question now is, why do we encounter operational delays? We now go to the major point of our discussion today, how to eliminate those delays. Eliminating operational delays and building supply chain resilience. I want to tell you something today. Eliminating operational delays and building supply chain resilience requires a mix. Just like something you put together. It's a mix of end-to-end visibility, proactive suppliers diversification, and data-driven inventory management. Excuse me. It's like the grammars and much, right? We'll break it down. Another thing I want you to pay attention to is that organizations must shift from reactive crisis management to strategic technology-enabled operational flexibility. What do we mean? Another grammar. Gone are those days when the manager, a supply chain manager, will tell you, no worry, let's go with the crisis. Let's let's see the crisis, we'll manage it thereafter. No. You should not be reactive crisis manager, but you should be proactive. And your proactiveness should not just be manual. It should not just be analog. It should be technology enabled. So if there are flexibility that needs to come in, you give it. And I believe Fembol is working on this. Because the fact is, no big firm, a supply chain management, will want to have a manager that is reactive crisis managers. So we want to eliminate this by having a mix of these factors mentioned and shifting from reactive to proactive. And I give it to you. Fembol is doing well in this area. Can I now go to the key strategies for resilience and speed? Because of my time, I will limit these strategies to 6. And I want you to please follow. The first one will be skillful use of MRP. MRP means material requirement planning, basically for planning and forecasting. And the key element of MRP include demand forecasting, master production scheduling, bills of materials, inventory records, MRP software to generate material plans and reports. What do we mean? You cannot eliminate operational delays if you are not skillful in the use of your MRP. Material requirement planning. Take for instance, if a manufacturer receives a large custom order, its MRP system can automatically calculate all required components from raw material to sub-assemblies and place purchase orders as needed. You cannot do everything manually, and you think you will eliminate operation delay. It's not possible. So you need to be skillful about this. The second one is enhance end-to-end visibility. You have to utilize real-time tracking and digital twin technology like ERP or SAP software to map your entire supply chain. SAP or ERP means the same. That's enterprise resource planning. You want to use it to help you with your end-to-end visibility. ERP is a system that will trigger some certain things for you. Let me give you an instance. While Amaka was talking, she mentioned about bill of lading. That is the germane. It's true. Let me bring in how ERP or SAP can work well in this scenario. Let's say, for instance, you have received your shipping document. Bill of lading is there and some other ones. You are to process PAR. That is pre-arrival assessment notice report. In your ERP, the head of your department will raise a KPI for you. That's key performance indicator. That once you have received complete shipping documents, you should send to bank, where bank will validate and send to customs for approval and registration. If the day you receive the complete shipping document and the KPI indicator there is 1 day, if you fail to send the document to bank that day, then you are lagged behind with 1 day. ERP will trigger it under exception. Let's say you've not sent the document to the bank for PAR process, and your KPI indicator for receiving registered PAR is within 3 days. Once it is 4th day, exception will come out from your system that yes, you need to follow up with this, either to change the bank or to escalate to your head of department. Those things could not be done if you are not making good use of your SAP or ERP. So this allows you to spot bottlenecks early, to predict disruptions, to make informed routing decisions before delay escalates. So you can see that if you use enterprise resource planning ERP, it will give you daily exceptions, and daily exception will trigger weekly exceptions, while weekly exception will trigger monthly. And when you are preparing your report for the head of the department, ultimately going to the higher, you can see that you've done the best you can, or the areas you are lagging behind, then you have eliminated that delay, either coming from other stakeholders, external or within. I'd like to pause. Blessing, am I still audible?
Yes, sir, you're very audible. We can hear you.
Thank you. So I mentioned 2 key strategies here now. Let's go to the third one. Diversify your supplier base. You need to avoid single source dependency. What does it mean? Do not let any supplier monopolize the situation for you. Establish relationships with multiple suppliers across different geographical regions to protect against localized or geopolitical disruptions. What do we mean? A supply chain manager, from now I tend to be calling it SCM, must manage a robust and a reliable database of registered foreign suppliers, vendors, contractors. But do you know something, that suppliers are different from vendors? Do you know? Please check on this later. And you need to make sure that no one will take you to ransom because you have diversified supplier base. I'll give you an instance. See, Amaka was trying to mention something about what happened in Nigeria briefly, then while she was presenting. Let me navigate to what happened from there. I'll pick it up from there to what happened globally. How many of us have heard about Strait of Hormuz before? Have you? A year ago, 2 years ago, 10 years ago? But all of us are one way or the other be depending on crude. We know that Strait of Hormuz was not where the crude is being taken from, but it is a passage. But do you realize that the whole world, including Nigeria, were focusing their attention and using only one damn passage? Though there are some other passages, but reports have shown that it's the major one. So when the Strait of Hormuz was blocked, what happened to the crude? Problems. Then Nigeria would have been better because we have crude in Nigeria, we are blessed. And apart from that, we also have refineries. That is, if no crude passes Strait of Hormuz, Nigeria can do better. Because Nigeria might have diversified their supplier base. But you now realize that in Nigeria here, politically, our refineries are not working well. Allow me not to go too much into that. And later on, we are still blessed with another thing, that we have a private sector that can help us with this. That is Dangote Refinery. Okay, allocate some crude to him so that he will service Nigerians. Then Nigerians will care less about what happened globally. You also hear about politically why some part of even the crude we are having here is being serviced for loan. Please allow me to stop here as well. Why am I driving out? Nigerians. Just like many people in the world, the countries in the world, they do not diversify their supplier base. And you could remember just little thing that happened in the Strait of Hormuz caused a lot of pandemic to the whole world. Now bring the ball home to SCM, supply chain manager. You need to diversify your own raw materials. Do not allow any supplier to monopolize if you want to eliminate operational delays. I also mentioned another thing here, that is, you need to be careful, you need to be aware of different geographical regions. I'll give you an instance, China holidays. Are you aware that China observes 7 official public holidays each year, and in total roughly 29 statutory days off? Even the government frequently swaps adjacent weekends into the work schedule to create longer contiguous blocks of time. And when you ask the China that what are they doing, they'll say it's a golden weeks. I could remember vividly while I was sitting as the head of supply chain manager, that is head of supply chain management in Tabo International. I could control the procurement Nigeria, and also have the parts in Dubai. We came with a solution that when we are having issues with our geographical location, say China or India, we should have something somewhere where we could get. Number one. Number two, why are we not being proactive to have those raw materials when we have gotten the holidays for these vendors from these suppliers that they will not open this particular period of time? They need to get something down. So as SCM, you need to diversify your supply base, don't monopolize, and secondly, pay attention to geographical regions. And that will take me to the fourth point. Implement strategic buffers. Buffers can be a big grammar, but it's not. Many of us drive car, just call it shock absorbers. When you're in the car and you don't want to feel much of the pit or pothole or anything, your shocks absorb it for you. When you're talking about supply chain management, buffers can be likened to that. And I'm telling you today that you need to move away from this model called JIT. It is just in time. It's a model that archaic supply chain manager use. But transit to just in case. That's JIT strategy. What does it mean? Keep strategic safety stock in regional hubs to prevent stock out during supply shortfalls. I just mentioned to you that when China is on holiday or India, we diversify. Apart from the diversification, we also sell some certain raw material as buffer. Let me also come back to my days in Tabo International. You know, I was into skincare, hair care, and tooth care. And for my tooth, which you know about double product, I can never make any toothpaste without guanidine carbonate. Guanidine carbonate can only be sourced from two places, but likely deposited in China. And in China, I have only one major supplier because of the hereditary stuff. So if I know that China will be going on holiday and it's going to be another problem with getting it, I need to sell some other raw materials somewhere. I will tell my warehouse manager to keep it so that when the problem comes, that is just in case I use them. Another thing I need to mention here is that every FMC SCM must emphasize on buffer. It must organize and run S&OP sales and operation meeting. What do we call S&OP meeting? That is sales and operation planning. It's a meeting for import and export projections. Let me also bring it back to my old days, FMCG and TAPO as well. Let me refer it because of this. There are many departments, like 4, that claim ownership of what happened in supply chain management. We have procurement, who want to get it from you. We have sales that believe they can give you everything you have. We have marketing department, and we also have finance. Each of these departments claim they are the owner of supply chain management, and there's kind of power tussle if you have been there before. So as a supply chain manager, I chair the meeting of S&OP, that's sales and operation. When the marketer says they have gotten a client, I make sure to mention what are the demands from these clients. Because the marketer says they have brought a client, then they should be praised. Then go to procurement. How are you going to make all this? How are you going to get the raw materials? To make sure that you make this item, that's the make. The second one I mentioned earlier on, that is second one. Third one, how are you going to deliver the logistics? Then finally, you need money for all these things. How would finance look at all this? So if you have a separate meeting with procurement, believe you me, he will tell you everything revolving around him or the department. You do the same thing with the other ones. But if you bring them together, when there is a new client coming, you request for what happens. It brings together sales, marketing, operation, and finance to balance what customer want with what the company can actually produce and afford, resulting in a single profitable plan. So S&OP meeting is an integrated business management process. And I'm telling you this for free. Wherever you are, if you do not have S&OP meeting and you're running a supply chain management in your firm, you may just be waiting for a big disappointment. Please try this. And a supply chain manager must maintain supply chain inventory and records, ensuring availability of buffer stock. I'd like to pause here as well. Blessing, am I still audible?
Very audible, sir.
Thank you. I'll quickly round off. I'm going to the fifth point. That is optimize inventory and SKUs. We all know SKU, stock keeping unit. It's a unique alphanumeric code assigned by a retailer or a distributor to identify a specific product or variation of a product, allowing supply chain system to accurately track inventory, sales, and logistics. I'll tell you something. I mentioned one raw material to you the other time, guanidine carbonate. How very strong it is that your tooth and your teeth cannot be as so strong with your enamel without not having GC in the formulation of your toothpaste. But if you are with me and you are with at my warehouse, or you are with my production crew and you are from anywhere, you can never know I'm referring to guanidine carbonate because I'm using SKU. I'll just say, give me G17. This is different from UPC. UPC is Universal Product Code. They are standardized globally, but SKUs are created internally. They are formatted to be human readable and scannable so that warehouse workers, logistics softwares, and point of sale systems can easily recognize product traits. Then I want you to take something home from here now. Narrow your SKU catalog down to your top revenue drivers. What does it mean? There are many SKU you have. Think about, check about, and focus on the SKU that drive your revenue the most. If you do this, I'm sure, your finance team usually fight with you. They will love you more. Because this decreases storage cost, it increases margins, and simplifies warehouse distribution, ultimately reducing final mile delivery times. So you need to narrow your SKU catalog down to your top revenue drivers. There must also be good knowledge and effective implementation of a contract management system, that's CMS, within the company. Allow me not to go there now. But just work on your SKU and be so mad about it. Then let me go to these 6 points because of my time. You need to strengthen the stakeholder communication. There must be collaboration with other departmental heads to create coordinated plans for business growth. From experience, procurement team must understand finance team very well. Both of them should work together. While sales will have to take the whole credit that they drive the revenue of the company, marketing will be saying nothing could be done if they are not there in the first place. I think Blessing can relate with this. So, common objective must be sought for. Also, you must foster collaborative relationship with suppliers and logistic partners. Transparent communications allow for synchronized reactions when unexpected shocks hit the market. Take, for instance, if finance thinks that he knows everything all, and there are some shifts in the FX, or there are some particular problems in a certain period of time in the company, the problem will not be solved. But when finance team and all stakeholders are abreast of CPM policies as regard FX and related issues, the whole things will be one-one. So what have we talked about? We can eliminate operational delays by using these 6 points. Skillful use of your MRP, material requirement plan. 2, You need to enhance end-to-end visibility, your software. You need to diversify your supplier base. You must avoid single source dependency. You need to implement strategic provers like Toyo shock absorbers. And you should transit from JIT to JIC. And you must optimize inventory and SKUs. Why the last one is you should strengthen stakeholder communication. So when you do this, you will eliminate your operational delays. And it will be to the betterment of your company. And also, your KPI will be well established and you have reasons to move up in your career. I know there will be some questions, so there should be some answers. I think this will be handled later on by Blessings. But I will have a question for you, and I don't know how many there are in the audience. Here's a question. And if you can send your answers, Blessing, you please help me in this area. If you can send your answers immediately before the session runs out, and you're correct, I promise you on behalf of Question Logistics, you will have a gift, a financial gift, and you smile about it. The question is, you can see it, is SAP an ERP or MRP? Remember, I've talked about ERP a lot and SAP. I also talk about MRP, right? ERP like I mentioned, enterprise resource planning, and MRP, material requirement planning. And I also told you about SAP. But is that SAP and ERP or MRP? I would like to have your answers, channel it together, and let Blessing get across so we can check together. And your gifts, surely today will be given if you got it correctly and shortly. Thank you. Over to you, Blessing.
Thank you so much. Thank you. We are actually spilling all the teas like for free on this webinar. Guys, please, I wish you can actually clap, but thank you so much for that insightful section. Like, I've learned a lot this afternoon. Please, if you are here and your friends are not here, they're in the supply chain industry, quickly share the link to them now and let them join, because I'm not sure you can get all this information for free outside, and you are sharing it for free. Like, this is a lot of knowledge, and this is what your business definitely needs to scale. And then again, Mr. Jeremiah, thank you so much for the giveaway. So please go to the question and answer section. If you can answer this question correctly, he has said it, the prize is huge. So don't miss out on this. And don't forget, the question is SAP or ERP? Is SAP an ERP or MRP? Put your answers in the Q&A section and we'll pick the winner before the end of this section. And also, if you have any question, also put it in the question and answer section and we will take it up from there. So we have one more speaker to go. Amaka Ude. Amaka Ude is the senior supply chain specialist here at Fembol, and today she's going to be basically teaching us how to cut costs in supply chain. She has like vast of experience, and we cannot wait to hear from her today. So Amaka Ude, please, over to you.
Good afternoon, everybody. My name is Chiamaka Ude, and I am delighted to be speaking on a topic that is becoming increasingly important for businesses across Africa, building cost-efficient supply chain where African businesses are losing money. First, I would like to begin with a statement that says that African businesses do not lose money because they lack customers. They lose money because inefficiencies hidden inside their supply chain quietly drains profit every day. Now, today we'll be looking at where those costs are hiding, the common mistakes businesses make, the hidden costs or in supply chain, demurrage, wastage, logistics inefficiency, and warehousing risks. When you are not, imagine if you want to store an item that requires a cold room, and you're going to drop that item in maybe a warm temperature room. That alone can cause loss can cause a loss, and it would affect the business. And it brings us to the second topic, the common procurement and inventory management mistakes that businesses make. Reactive purchasing. What do I mean by reactive purchasing? So when a business fails to plan ahead of time, it results to last minute rush, and that would require companies to pay higher prices or even compromise on their quality and delivery time. So if you don't make plans, maybe you have an item of maybe you have to produce 50 bags of coffee next week, and you're not planning to get the packaging materials that are required to package this coffee that you need to send out to your distributors or all of those things. And then you now get to that week that you're supposed to produce your coffee. You see that let's say you are supposed to produce 50 and you have 20, you start looking for alternative ways to get packaging materials. And apparently it will mean it's either you buy at a higher cost from maybe a retailer, you're on a normal hand, that you buy from a manufacturer that can sell. Maybe if you buy bigger quantity, they are going to reduce cost, but because you do not have at hand, you just need to get something so that you can move out, and then you just go to a retailer and just buy it, and then you package these things. You see that those are the kind of common mistakes when you don't plan ahead of time. And then poor demand forecasting. You order too much of a wrong product and then too little of what is needed. So instead of using an actual data to predict what the consumer needs, you just rely on guesswork and not do proper demand forecasting, proper planning. And then another point is ignoring the total cost of ownership in supply chain. So it goes from the supplier to the manufacturer to the distributor, and then to the final consumer or to the final customer. Now, this whole thing, they are charging, let's say I don't know how to put it, but they are fees involved in all of those movements. Let's say shipping costs, customs, and all of those things. Even the agencies that you are supposed to regularize with, you have to go there, pay a certain amount of money, have their permits. But when you try to ignore such cost, at the end it would be a lot of issue. Then you see that in the long run it would actually be very, very expensive. And then another point I would bring out is lack of end-to-end visibility. So departments in an organization or in a business are supposed to work hand in hand. They are supposed to communicate. Whereby there is a miscommunication between departments, you see that there might be issues. So imagine that procurement buys a massive bulk without notifying the warehouse managers that, okay, we need space to house these items that we have. It will lead to overflow, and then also it might also lead to damaging of these items. So we should just always make sure that as a business we are not making these mistakes and putting the right thing into place. The third topic is reducing waste and improving forecasting, proactive planning. You don't have to wait for a problem to occur before you put in necessary actions or before you put things into place. So let's say if you're coming in with let's say 10 boxes of 40-feet containers, and then you need somebody to, of course, when it comes into that country, you need a logistic partner. You need somebody that would help you either clear these items, clear your containers, and then take it to either your warehouse or even the person that is whoever is buying the item. Now, you don't have to wait for your boxes to get to Nigeria before you start alerting the logistics partners that would help you clear your boxes. You have to pre-inform them, give them the necessary documents, give them clear communication of whatever it is that is coming into, so that they on their own can prepare. Because over here we also have like the logistics partner, we also have some plans to make before your boxes come into, or your containers or your products come into the country. So so proactive planning, plan ahead of time, early documentation checks, you check your licenses, you check your permits. Now, if you're bringing in your items for sea freight, even air freight, there is a document called the Bill of Lading and an airway bill. That's a powerhouse. Without an airway bill, even if you are done with your custom clearance and you are done with everything, without that Bill of Lading, you cannot move that box, because it is that Bill of Lading that would help the shipping line say, okay, you can take out your boxes from the terminal, from the port and all. But without that, it is a powerhouse. If someone else should get hold of your Bill of Lading, I can assure you that that person can take your container out of the port. The person can take out your container out of the port. So early documentation checks, what is needed. I'm sure shipping lines, they also give us this draft to check the information. So let's say they give you a draft BL, and normally your container number is supposed to be CBXU, and on the draft Bill of Lading you're seeing DBSU. You can highlight that to the shipping line and tell them, oh, please, and please, this is the error I'm saying, please help. And so those are the kind of checks that can help delays, that can help demurrage, that can help costs, that can reduce cost. And then where also the permits, you have the SUN permit, you have the NAFDAC license, we also have NESRA, we have quarantine, so all of those things. And then another point is demand sensing. So I think for businesses, they should always know what is in demand and how to supply to the market space. The people cannot be demanding for for A and you're pumping in B into the market space. There you might experience a loss in that aspect. Then also share informations with suppliers, distributors, retailers. go into the market, speak to the small businesses and know, okay, what are those things that people are requesting for? What do they want? I don't know how this Coca-Cola campaign came about, but there was a time that Coca-Cola made a bottle that had everybody's name on it. I don't know who came up with that campaign, but I know that people specifically went to supermarket, ShopRite, just to buy Coca-Cola bottles that had their names in it. And it was a thing back then. People would snap and then post it on their WhatsApp status or Facebook. So those are the kind of things that we can do that can reduce waste and continuous monitoring and clear and early communication, communicates with the suppliers, with the transporters. If you need anything, if you want a warehouse that would store maybe a very sensitive item, you can communicate that to whoever is handling this the logistic aspect of supply chain. So it brings us to the fourth topic: building resilience against market disruptions. Now, resilience requires balancing efficiency with preparedness. Firstly, sourcing diversification and multi-sourcing. As a business, you don't have to have one single vendor for your materials or your products. You need to establish a relationship with multiple suppliers, and that it will help to ensure that there is no shortage, delay, or maybe unexpected market changes. A supplier can let's say a supplier can run into and maybe like a farmer is also a supplier, like maybe the farmer that maybe brings out the cocoa, that farms the cocoa and then gives to the manufacturer. So let's say this is just a scenario. Let's say if their farmland maybe develops an issue, or they are not able, the farmland is not able to produce as much as it was producing. But if you have another supplier that could supply you that same item, you would not have any delay in your business. Then source from different geographical locations. Also, I know that there was a time that there was this war between the US and it affected some of the businesses, and even as at then shipping line started, even I think they called it war surcharge on shipping invoices. Yeah, that's what they called it. I think war surcharge. Yes, I saw it in some of our shipping invoices. So when you're able to source from different geographical locations, it can also help to reduce cost when one has actually gone out or maybe is experiencing an issue. Then we have contingency planning. Things can come up at any time. Fuel price, exchange rate fluctuation, regulatory changes, and all of those things are things that can just pop out. From, should I say, nowhere. So we should also plan for such. Contingencies and for such inconveniences that might arise in our business. So the fifth topic is the practical cost saving strategies for SMEs and large businesses. So for SMEs, you can work with experienced logistic partners, improve demand planning, reduce energy dependence where necessary. So imagine if you like you have a cold room in an area that you don't have access to light, that would automatically mean that you will be depending on fuel or diesel. You know, you will be depending on fuel, on diesel, and that would mean more cost for you as a business, as an SME. So we should always put things in place that would, that would help us save costs. That would help us save costs and at least and our business would be profitable. Then seek professional seek experienced logistics partners, seek professional advice. Many businesses lose money because they try to manage complex supply chain processes without specialized expertise. When you work with experienced logistic partners, it helps to avoid costly mistakes and also improve operational efficiency. Then ensure that you have the right documentation, the right permits, and the right certifications. Use the right transportation solutions. I know that for one thing, I know that is never stopping in supply chain is that it moves. There's always a movement in supply chain. It is moving. You know, supply chain moves. It is not a stagnant it is not a stagnant industry. It moves. So even from the supplier, it is moving. From the manufacturer, it is moving. Even you as a person that is going to the small retail shop here just to buy a sachet of say maybe peak milk, you have also engaged in that whole process, because automatically it means the seller is short by one, and he would need to buy more, and he would need to go to the market and still demand for that item, because the demand is coming for that particular item. So you partner with the right supply chain experts. Always make sure that whoever that you're partnering with is the right a reliable logistic partner, logistic partner that can help optimize routes, improve visibility, manage compliance requirements, and reduce operational inefficiency. And here at Fembol, we work with businesses to develop tailored logistics and supply chain solutions that fit their specific operational requirements, helping them reduce cost while improving efficiency and service delivery. In conclusion, one thing is certain: businesses do not lose money only because of market conditions. They also lose money through preventable supply chain inefficiency. By improving forecasting, planning proactively, maintaining proper documentation, businesses can identify and eliminate unnecessary costs. One thing is for sure: if your supply chain is strong, your logistics become smoother, faster, and more cost efficient. Thank you very much for listening.
And we are ready, of course, if you have questions that you want to ask to the facilitators, we're here and ready to answer your questions. Thank you all.
All right, thank you so much, Mr. Obie. That was a lot of knowledge. AI in supply chain is here to stay, and the faster your business adopts this, the better, and then you would be able to scale faster. I'm sure we've learned a lot today, and we are ready to scale in 2026. I mean, after this webinar, everything that we've learned, if we are able to implement them, we will definitely see changes in our businesses. So yeah, before we move to the Q&A section, we had like a giveaway going on, and I'm seeing lots of answers in the comment section. So if you like money, yay! So I wonder, okay, Mr. Jeremiah, I would mention, I don't know if you're still here. I'll mention all the answers that we have now. Mr. Abraham says SAP is an ERP. We have a lot of ERP. How am I going to pick the winner like this? Okay, Mr. Ken says it is an ERP. SAP is an Mr. Vogue says SAP is an ERP. This is really a lot of knowledge. Thank you so much, Vogue. SAP is primary and ERP. That means everybody was actually listening in this class. Interesting. Enterprise Resource Planning System, though it originated from MRP concept, or Mr. Folashayo. Mr. Charles says SAP is an ERP. Mr. Ken says an ERP system built in MRP functionalities. Awesome. Mr. Abraham says SAP is primarily an ERP. Almost everybody got it correct. Somebody even helped us to type like everything that this man taught today. Wow. SAP started in 1972 as a system for automating financial and material management processes, which had roots in MRP thinking. Over time, it evolved into a full ERP suite. Hey, the competition is tough. Oh. So who is now the winner? Everybody actually got it correctly. Emeka, we can see, please, can we get a PDF copy of all these files? Awesome. Yeah, definitely would send it to your email address. Hello, I have questions to ask. Am I allowed to do so now? Or yes, please, if you have any question, please type your questions in the Q&A and we'll pick it up from there, please. Type your questions here. We'll pick it up. If you have any questions, please type it. We'll start the Q&A session now, and we'll be asking our panelists some questions. The first question will be, hi Amaka, please confirm you're here. Hi Amaka, can you hear me?
Yes.
Okay, awesome. Thank you so much for the insightful section today. The first question. Okay, Mr. Jeremiah, I can see you. The first question is, how do we improve forecasting and planning and supply chain? Like from your experience, also where do businesses lose money the most in supply chain?
In supply chain, I think it's more of the demurrage part. That's where they lose money. Poor planning, when they don't plan and then their containers come and then get stuck here. It's really a thing. That's where most of these businesses lose money. Yes.
Okay. Thank you so much, Amaka. Okay, Mr. Ovie, your question is, at what point should a growing business start thinking seriously about supply chain structure?
Okay, thank you very much. So every business should have a growth plan. And at that point, when you start thinking of the next stage, at that point, when you start thinking, oh, we can do more volumes, or we can open more shops, or we can, engage more customers, then, so let's even take supply chain as a whole. If you're a business that has to go through the supply chain model, you have to take it serious in the first place. We've talked about, find areas where you can cut costs, and documentation is a huge part of that process. Most of the delays, most of the cost implications in the supply chain space has to do with documentation. Let's say you've gotten your whatever you're manufacturing in China, it's perfect, it's been manufactured. Most people go to China because it's economical. You've succeeded in doing that, and then your shipment has arrived in Nigeria, but you have the wrong HS code that you've engaged with your suppliers, who doesn't know, probably doesn't understand the Nigerian system or the tariff system in Nigeria. You have the wrong HS code, you have the wrong description on that. That affects all your shipping documentation. and it can be a nightmare in rectifying these mistakes on the document. While you're rectifying that, you are accruing demurrage from the shipping line. You are accruing storage charges from the terminal. Those are combined. And these are costs you must absorb as a business. And somehow you find a way to pass it to the customer. So you cannot be competitive if you do not pay attention to having a seamless, connected, integrated supply chain system from manufacturing to delivery to your customer. Huge part will be the documentation. You get a documentation wrong, big problem.
Okay, thank you so much. We have one question from Emeka, and he says, my questions are basically focused on those of us venturing into procurement. Is there a strategy out there for us to follow while in search of clients? I mean, how do we get customers to supply or connect to? Mr. Ovie, would you like to take that?
That's fine. So we've talked about businesses that don't operate in silos. There are various even websites, and there are various groups of companies, various outlets out there where you can source for this. Take, for example, you're sourcing for, just for argument's sake, you're sourcing for aluminum sheets. Now, so you do your homework, you engage with, sometimes you have either a consortium of organizations, sometimes you have a website. There's some websites literally that you can actually pay to derive that data. But of course, before you choose any supplier, like I've said, data is key. You have to understand their value proposition. What data do they have that supports whatever it is that they're marketing? How easy is it to reach them? How easy are their processes, their payment terms, the terms of manufacturing, their sustainability plan to ensure they are meeting all of these, their lead times for manufacturing and all of that. So you have to understand suppliers vary. There are suppliers who mandate that you pay them 100% before they start production. There are those that will mandate that you pay 30% upon placement of order, another certain percentage after maybe the manufacturing or the order is ready to move or put on board the vessel.
Mr. Ovie, we've lost you for a minute. Can you hear me?
Oh yeah, I don't know what part my connection may have disrupted. What was the last thing?
No.
Can you hear me now?
Yes, we can hear you.
So I mentioned that there are websites, there are a group of companies, there are companies who actually engage in helping you source for the right supplier. But even at that, when you've identified key suppliers to engage with, you have to do your due diligence. What is their model? What processes do they engage in? What payment terms do they have? How easy are they to reach? Are there others that can help validate? What is the data that they have to show their traction or their history? So with this data, with this information, you can make a decision that you can determine which supplier. So sometimes it's not about the cheapest supplier. The cheapest supplier may mean you're spending 2 months in getting your product here versus another supplier who is adding maybe just $1, but is sure to give you a guarantee that you have a shipment here within 10 days, for example. So it's that balance of looking at the whole factor of engaging the right partnership, even on that supplier level, that helps you to ensure success and efficiency.
Oh, okay. Thank you so much, Mr. Ovie. I think Emeka is saying, please, the question is focused on being the supplier. How do we get those to supply to? And he also says, can we get these websites or companies that can connect us as well?
All right. So let's say you produce, right? And then you're looking for a market. That's basically what you're asking for. Let's say I have a bunch load of cocoa or granite or cashew nut or shea butter and palm kernel shells and stuff like that that I want to export. Your question, if I understand correctly, is how do you get the people who are going to buy these items who you can export to? So take, for example, Fembol as an organization. We have a network of organizations that we belong to. And all we need to do is to reach out to our network and ask, we have this product across, ready to ship to Europe, to Asia, US, for example, and then we'll get those who are interested. Now, but if you're not a Fembol, what can you do? Most of these informations are actually available online. Sometimes you may have to pay a subscription fee for some website that will link you to these buyers. So it's a seller looking for a buyer. There are websites that link things like that. You state your commodity, the quantity, the volumes that you have, and then people who are interested in buying that will reach out to you. Due diligence will be performed, quality assessment will be done, and then you agree. That's one route to go. Another route to go would be to reach out to companies, maybe like Fembol, for example, who have experience in linking buyers with sellers, or who have experience in handling the end-to-end within that system. They will give you the visibility and give you options that you can choose from. And then once you're satisfied with what you're expecting or what you've been presented with, you allow them to engage on your behalf. At the end of the day, all you just wait for is the money. So, things like conferences also help. You go to export enables to meet both sellers of products, manufacturers of items, and the people who may be interested in buying these items. I think the Nigerian Export Commission also has lists of maybe some items or companies and organizations and countries that may be interested in certain products or commodities that we have in Nigeria that is needed in other parts of the world. So it's this collaborative effort of using these sources to locate and identify the right buyers that we need that can help.
Okay. I hope your question has been answered, Emeka. Thank you so much, Mr. Ovie. So the next question is for Mr. Jeremiah. So what should businesses focus on if they want to improve delivery timelines and operational efficiency?
Documentation must be key.
Okay.
Documentation must be top tier. Your clearing is the product of your documentation. So the point is, if you use the wrong HS codes in the first instance, you are bound to have delays from the customs. But if you get it right from your documentation stage, you are better off. 1, 2, your KPI with each department should be strictly followed. Though it must be flexible though, but it must be strictly followed. It must be standardized. So when your documentation is okay, and you're having your to-do list each day, that helps a lot. Thirdly, there must be departmental meeting weekly. And there should be daily tips on what has gone for some period of time in a day. So if I want to work on this thing I said now, for you to eradicate this, make sure from documentation stage you get it right, number 1. Number 2, follow standardized KPI. And 3, ensure that there is no communication gap, either within or outside the stakeholders. With this, you eliminate the delays. I don't know if I've touched upon it.
Yes. Thank you so much. The next question is, how do companies improve forecasting in supply chain? How do they improve forecasting and their planning processes?
For me, right?
Yes, sir. Okay. Mr. Ovie, do you want to take that?
Okay.
Let me just try a little bit. I know Jerry covered that during his presentation. You heard when Jerry was presenting, he emphasized, that's why we had that question, ERP, if it's an SAP or an MRP. There's so much we as humans can do manually. But if you have a system, a software, an AI integrated platform where you feed your processes and your business into, Such models have predictive indices that can help guide you. And you'll be surprised at the amount of data they churn out. We use extensively, we have our own product at Fembol, for example, that is AI driven, that provides insight for the next 6 months, 1 year, by looking at our trajectory, taking cognizance of what's happening all around us and globally, and using that. So for example, when you have that built to sustain and support your business, it already factors in issues like the Strait of Hormuz. It already factors in areas where there's war. It already factors in avenues, countries that have trade embargoes.
I'm sorry, we can't hear you, sir. Your line is breaking.
So this is another thing that business.
Hi, Mr. Ovie, can you hear me? We lost you for a bit. Your network is.
So basically, yeah, and the connection has been up and down. Can you hear me?
Can hear you now, or we lost you for a bit.
Maybe I just let Jerry go on with it because my
All
network is bouncing up and down.
All right, thank you, sir. Thank you so much. Mr. Jerry, please, can you throw more light on that?
Yeah, I didn't get that. What's the point?
So how can businesses basically improve in forecasting and planning? I get you
now. I get you now. Forecasting is not what you just do by waking up and you think that, yes, there must be demand. Demands must be geared towards forecasting. Take, for instance, if you've been needing 200 cartons of a particular product, how did it come to play? That is by demand. 2, you pay attention to seasons, that is festive seasons, some periods. For instance, if you are maybe a company that produces umbrella, and you know that during the rainy season, you sell more. So you forecast that if I produce umbrella, maybe 1,000 per month during the dry season. When I'm going to the period where it's going to be needed more, I will increase. So I will forecast. So my forecast again will not just be on just a wishful thinking. It will be based on demand, based on what happens, and your feasibility study will help you. So with that, you can forecast well, and you will not meet a brick wall when you forecast.
Okay, thank you so much. I hope the question has been answered perfectly. So plan well, ensure that you check how much that you need to service your customers for the entire year, based off of what you've seen from the previous year. One last question, and then Amaka, we still have one more question for you. I think Charles is asking, for businesses that rely on vendors to service customers, how can they manage these vendors and make sure they are able to prevent constant out of stock feedback? Okay, I think Mr. Jerry, you'll be best to answer this question.
If you are looking for another services of another company, under supply chain, you call it third-party service provider. You will see written 3PL, 3PL. If it is 3PL, that's third-party logistics. And if it is ordinary services, other ones will be mentioned, but you will see 3P first. That's third-party. Now, if you require the services of a third party for a particular product you have, remind you, your product may not be a tangible object, it may be services as well in this context. You mention what you want to be done, why you protect your recipe. I don't know whether you're getting my point very well.
Yes, sir.
Protect your recipe very well why you are involving a third-party service provider. And you also need to align your boundaries so that the MD of Fembol will understand this more so that things will go on well. So the point I'm saying now is there's nothing wrong while you invite a third-party service provider to set your boundaries and make sure that they are all written down and you do it at a specified time. And you make sure that your contract is renewable. It's not once and for all. With this, you can make good use. And last time I was presenting, I mentioned about reverse logistics, which I implore the audience to go and read. Let me chip something for you. If you want to do well for now, take for instance, Fembol. Reverse logistics could be given to a third-party service provider because of a lot of advantages it has, while Fembol controls all the activities. So with that, you know that there are some areas that third-party service provider can really fit in well, while there are some areas you should handle yourself. You set the boundaries, make sure that they are written down, make sure that the contractual agreement is revisited as agreed, and that you will enjoy using the services of third-party provider.
All right. Thank you so much for answering all these questions. I hope nobody else has any question again. Okay, thank you so much, Amaka. Thank you so much, Mr. Obie. Thank you so much, Jeremiah, for these insightful sections. We would soon call it a wrap, but before then, we need to announce our winner, right? But it looks like nobody got the answer correctly. The question again is SAP an ERP or an MRP? Apparently, all the answers in the chat box is saying ERP, ERP, ERP. But unfortunately, we still have one more question. We'll take that after this. Unfortunately, that's not the answer. So, Mr. Jeremiah, please, can you enlighten us again?
Yeah, there was somebody that was towing the line before the second to last. He started on the journey. But I'm not talking about the one that quoted when SAP started, though. Before then,
someone said SAP is a type of ERP, and it is the biggest enterprise platform in the world. And MRP is a subset of an ERP system, specifically for material planning, while an ERP system is used to manage end-to-end business operational tool for businesses.
Very good. What's the name?
Emmanuel.
You said?
Emmanuel.
Oh, redefine it a little bit. He tried. I'll give it to him. But let me pop this one up very well. SAP is an ERP, but not MRP. How do I mean? MRP, which is material requirement planning, is not computing system. It is a core functional. It's a core functional module built in the SAP. What do we mean? This is what I'm trying to say. MRP focuses exclusively on manufacturing. It calculates exactly what materials you need, how much you need, and when to order them to meet production demands. But SAP, which also means ERP, is the broader system. It integrates the MRP module with your company, financial, sales, human resources, and what have you. So that's why I say I'll give it to Emmanuel, part of it. Okay. But for the information to sit down very well, note, SAP is an ERP, but it is not MRP. Meanwhile, MRP could be embedded in SAP, but the broader work of MRP stands on its own. While if your organization deem it fit and want to include MRP in my SAP, it can be, but that is not the functionality of it. So we can say SAP is ERP, fine. But MRP stands differently and it works well. Thank you very much. So you sent the details of Emmanuel to me on behalf of Question Logistics Limited. It will be gifted. Thank you.
All right. Thank you so much. Thank you so much, everybody. This was really an insightful section. And if you have any more questions, please I think some people are still even texting their questions, but we can't take any more questions. We need to call it a day. If you have any question, my email address is displayed here. Please, you can copy it and send me an email. Then also, Emmanuel, please send your account number, or you can type it in the chat box, or you send it to the phone number displayed.